Welcome back. You're watching NDTV Profit. The markets has slipped even further. Now the Nifty is closer to 8180. For the last 2 days, we've seen the Nifty make a high of around 8188. So it remains to be seen whether we stay above those levels at all. There has been about profit taking. The markets are just higher by 6% from gains of more than 1% coming through. We have come off the highs of the day. Let's focus on the earnings season. 8K Miles came out with their earnings on a consolidated basis. Their revenues came in at 61 crore rupees and profit after tax at 8.7 crore rupees. There was a revenue growth of 21% on a sequential basis, profit growth of 21% on a sequential basis, and we saw EBITDA growing 33% on a sequential basis. To talk to us about the earnings, we're joined by Suresh Venkatachari, Chairman of 8K Miles. He's joining us from the US. Thank you so much, Mr. Venkatachari, for speaking with us at NDTV Profit. What worked for you in the second quarter? Wanted to understand what kind of margins did you close this quarter with?
We mainly growing in the life science and healthcare sector in the last 2 quarters actually. So we're witnessing a great opportunities in the cloud market for life science. Companies have started adapting in cloud transformation. Our Cloud EasyRx platform is gaining grounds on several new accounts, which is generating a very healthy margin for us actually. So we enjoy a very decent margin now, somewhere around like close to 30-32% EBITDA margin, what we are enjoying, and in terms of about 15% net profit on the minority interest. So we are seeing the trend improving, and with our more managed services operation and Cloud EasyRx operation get stabilized, we would be able to increase our profitability in the next few quarters too. We see the cloud adoption is one of the major drivers right now driving our revenue in this, and the acquisition of NextSage is started to help us in terms of putting more solutions around the life science sector. So that will be a next few quarters. Our growth strategy will be on that, aligning that.
Right. So the focus will remain on the healthcare and pharma business, or are you going to take your cloud computing capabilities to the other sectors and look to expand those as well?
Historically, if you see, we are working with the media companies, e-commerce companies, retail, and several companies. We started identified healthcare and life sciences as 2 key verticals in the last year or so. So that's where we're focusing on that. Additionally, we are seeing an opportunity in the BFSI sector where becomes now the cloud is also possible for the BFSI on a public cloud because every big major companies like Microsoft or Amazon is setting up a cloud data center in the different countries so that the sovereignty issues become solvable. And what our platform, what we built for the life science, Cloud EasyRx, actually we customized that into Cloud Easy Care for healthcare, and probably that can fit into the banking and financial sector. My background is actually, I came from banking. I used to head of Deutsche Bank, electronic banking, long back, and I built my first internet banking company. And we do see banking is a great potential for us maybe in the future. But right now, all our focus is currently adding into the healthcare and life science where we want to attain a leadership position. In fact, we are also just announced today also that we are advisory board for us from a very caliber, highly credible individuals from like the CIO of Tesla, who was a former head of VMware engineering services, to Reza, who is a former CIO of Microsoft, and many other advisors to really position our strategy into what are the high growth areas in the near future. So we are building a right team, building a lot of management expertise inside. We hired a good number of salespeople in the last 2 quarters, sales leadership and advisory board. All these things are making us to strategize and plan for a right direction to tap the cloud market. One of the things is I really liked it. What like just a day before I heard from a GE CIO Jim Fowler about cloud. He said it's no more testing or probability. It is actually there is no way people can inevitable and people will move into cloud. And he feels the cloud is the future to grow. Similarly, many of the enterprise customers are feeling the cloud is an inevitable thing. So it really helps us to improve our offering and solutions to these clients to increase our revenue and profitability.
Venkatachari, as you mentioned that you're expecting to attain a leadership position over the next 24 months. So can we expect more acquisitions from your side? Are you working on more of them? How many more can we expect? And what kind of deals did you really sign in this quarter?
Okay. In terms of acquisition, yes, we constantly look for opportunities wherever it can able to add value to us, whether it in terms of technology or whether it's in terms of domain expertise or in terms of complementary solutions. So we always constantly look. We believe both organic and inorganic is the way to really grow. But what we do is also not just only focus on inorganic. Whatever the inorganic acquisition, we actually scale with the right management team and right planning and execution. So the integration is also one of the very critical key for us to succeed in the future. And this quarter, we got a 2 life science customer and a 1 healthcare customer, which has started growing in a very significant way in terms of what we started with the work and the expansion in this quarter. The next quarter is a tremendous opportunity with the client, and it can go for a multi-year engagement. So we do see there is a lot of opportunities are coming in, and so the time to close the deals are getting shortened these days. But however, I believe that next 3 to 5 years, the cloud is a great opportunity. So many players are jumping in, and many big, large companies are also investing heavily on this space. So that is one of the reasons we want to attain a leadership position, specifically on the life science and healthcare, using our IP. IP is a very critical differentiator than like a traditional model of services. So we continue to invest on our Easy Cloud RX, Cloud Easy RX platform, and Cloud Easy Care platform. So that will strengthen. And also we are spending a lot of money on our analytics, building solutions. So these are the investing in IP is a very critical piece for success for 8KMRs, in addition to the sales, what we are investing.
Right. And the kind of, increase that we've seen in your revenues on a sequential basis and also on a yearly basis, what is the outlook now that you would want to give to the investors for Q3 and Q4 in terms of the deal pipeline that you're working around with?
What we see is general adoption and the number of opportunities coming in is significantly started to increase. So that is giving a lot of confidence for us actually. And the reason is earlier you have to really educate a customer and take him walking through what is the cloud, how it's going to fit into their overall plan. However, now everybody is started rolling out a plan, and whether they want to move in next quarter or maybe 2 quarters away or 3 quarters away. So, but people are started engaging us. So that is a very key differentiator what we are seeing the trend in the last 2 years. So the enterprises started believing the cloud is the way to grow. So that actually started to help us to build a better pipeline. And in terms of scaling our model, right, to grow, so that's what we are investing in IP. We are not just building purely a people model. It's a people and IP combination model where we can able to grow non-linearly much better. And some of the healthcare customers used to be very, very, for them the cloud is a bad word actually, used to be. But now they are seeing the cloud can really add value in terms of their analytics solution, or how do they build a HIE, health information exchange. So those are the key critical things what we are seeing a different trend even in the hospitals chain. And also in the payers market, there may be opportunities coming in the cloud. So what we see the whole trend is really very encouraging, and we want to capitalize this opportunity as much as possible by innovating new solutions to address the market share.
Right. Mr. Venkatachari, how much do you think your clients will be spending towards cloud computing? I understand the potential is very high, but adoption is still not that widespread. So over the next 2 quarters, what's the outlook like? What kind of orders do you think you'll bag? And what is the on-site and offshore mix here? Because there is automation, some workforce gets redundant, but how does it work in the offshore-onshore mix?
Okay, so in terms of onshore-offshore mix, it's actually, the cloud is not like a typical time and material project, what we really see traditionally. These are mainly, everything is automated. If you see our Cloud Easy RX platform, it actually automates the complete provisioning of a cloud systems, managing automation and monitoring and security and many other things and cost optimization. What it means is actually in a typical data center, if you have, say, like 50 people managing the data center operation, now with our Cloud EasyRx platform, you can reduce it to maybe 10 or 15 people, which is like considerably like about a saving of about 75% of your human resource. So that's a kind of a significant savings cloud will do. And in terms of the market opportunity, if you really see, many of the existing data center providers or the customers who use data centers are moving into cloud. But it's not going to happen overnight. It is going to happen in the next 2 to maybe 5 years period. So you see a great opportunity of ramping up over a period of a time. It's a very critical for us is actually to getting entry into the customer, started building their first few applications and move into the cloud, then make them comfortable the way how the cloud really save their cost and improve their process and agility for them to respond. Then when the velocity really increase, then your revenue growth immediately accelerate on the same customer. This is the same trend what we saw historically with our existing customers. Initial adoption may be very slow, but after that they really ramp up. So what is the encouraging trend is many number of customer opportunities. So when I have earlier maybe like a few opportunities to address and probably close, now we have several opportunities what we are seeing coming into our way. So, but again, the time take to close the orders, probably it will vary. But however, it's very encouraging to see many orders comes in these. So we would expect to grow similar fashion. I don't give a financial guidance at this stage, but we would be very happy. We would be in a position right now actually to expand our growth significantly. That is one of the reasons we are making a statement that in the next 24 months we want that kind of leadership position. So we want to do whatever way, whether it's a grow both organically, inorganically, and get a full experts to build into their analytics, all upselling on the accounts. That's the model what we are doing. We restructured our organization in terms of vertical and horizontal way to handle the different SBUs. So our model is actually not just like an offshore, onshore model. It's what the customer needs, because it doesn't matter for us whether a guy sits in India or sits in San Francisco or in our Texas office or Chicago, doesn't matter. They can able to deliver the customer because we very seldom go to on-site to the customer to deliver the solution. So the people goes there only for architecting, designing, and kind of a thing. The rest of the things are platform, what we want to really automate it, the whole process.
Thank you so much.
Sorry.
Mr. Venkatachari, thanks for the investments in IP, growth will be exponential a couple of years from now. Thank you so much for speaking with us at NDTV Profit, giving us more details of the earnings posted by 8K Miles Software Services. We will slip into a break at this point of time. When we come back, we'll continue on tracking the markets and we'll get you more updates on managements. We'll speak with the management of